the meme stocks, right? This obviously isn't going to be an entire run through of what meme stocks are, but basically it's just, in my mind, it's just market manipulation, fighting market manipulation, right? Buy up all the float, buy every time the shorts, buy every time there's high amount of shorts, cause a short squeeze, get momentum, pushing stock price up as people start to have reversed their short positions. They get squeezed. They have to fill their margins. They don't have the money to fill the margin fast enough. So the brokers say, okay, we're going to buy the stocks back and refill them into our accounts so that the people who legally own them have them, because short selling is borrowing.
Mhm.
But point is, all that stuff. Point is that my main point here is Jim Cramer and mainstream focus, right? So I think it was yesterday, or no, it was today. It was today. There was a report on what Jim Cramer was saying through CNBC about how he's talking about how, if a market values something, metrics, and it's persistent, then those metrics should be paid attention to. That could become a valid way of valuing an asset, and that's not untrue. I mean, technically speaking, way we value things and measure things generally were we created. But the metrics we use now for valuation, for technical analysis, they have some grounding, they have some past track record of working, and they generally are sound across markets, regimes, and time. This is really not. Even though these patterns have existed before, bubbles have existed before, asset bubbles and people buying too many stocks, 1999, 2008, people inflating stock prices or inflating asset prices irrationally, pooling in, piling in until it gets too big and it pops, and all of a sudden, everyone who invested all their good, precious collaterals or pensions or 401ks or money they couldn't afford to lose, tied up things in companies, all that stuff gets wiped. And I think that part of this is it seems like CNBC and a lot of other people too are starting to get onto this trend because they see it as a way to kind of profit on the momentum and to kind of get viewership momentum, because that's what's hot right now. And if you're a media company, you're just a company. You need to bring in more than you put out. Otherwise, you can't stay relevant. And how you do that? You do that by selling ad revenue, getting more ad revenue by selling ad space for higher amounts. You do that by getting more viewers, because the more eyes that are watching, the more valuable the slot is for an advertiser to put their ad there. But at the same time, I think that you're also looking at, a weird mainstream focus where this could become normalized, where people will be like, this is just a new way of trading. This is just a new way of investing. So that makes people feel more comfortable. Like, this isn't just some phenomenon. This isn't just some thing I should stay away from. Like, this could be a very a possible thing for me to get into. And then you might start thinking you probably get part of your portfolio, and you start putting more money in that you probably don't want to risk. And people start wrapping up bigger pieces of funds, or start investing things that they shouldn't be investing, that are more into more like a pension or a 401ks, and these things that are backed by companies that you shouldn't be investing in, but they think we can get more money for our employees, or we can get big return on this portfolio if we just put a little bit more of our fund percentage into speculation, a little bit more into these positions, which would then help inflate the prices even more, which is again causing a bubble. Because if you think GME is worth $325 a share based on its value, that's lunacy. I don't see those numbers for a lot of these companies, including like Clean Energy Fuels and Clover Health. These are companies that don't even have great revenue or didn't have large short positions, right? So there's really any sense, but from valuation standpoint, technical standpoint, or from even this meme kind of idea of push everything up. But when you have enough capital, enough individuals, you don't really need to keep to the same thesis. You can branch out and start just kind of throwing that weight around and bump up something like Wendys 26%, in one day, even though nothing really changes at Wendys, nothing changed in the fundamentals, and they didn't even have a big short. But now you have enough people piling in, watching Reddit, using them as a metric to try to predict what the next one is. If Reddit starts talking about this, that sucks up 30%. That's not 30% of value. That's anticipation of a big rally, so you can get cheap and easy money, which is not really how you should be playing the stock market, because that's not really what investing was made for in the beginning. And now it's just some derivative way of playing the market. You can, but it's extremely risky. And everyone looks at the high reward, but they don't think about it. This high reward, there's equally high risk. I mean, it's very, very rarely do you find high reward, minimal amount of risk. That's just not what happens. And my fear is, especially if these things become securitized, and by that I mean someone finds a clever way of trying to scrape the alpha off of these trades while mitigating and spreading the risk among other market participants. And then people start investing in them and start thinking they're really safe. And like statistically, the odds that all these companies are going to plummet go to zero. The same story we saw with all the mortgages and the MBSs in 2008, the mortgage-backed securities. And that's obviously not happening now, but my mind goes there in these patterns and says, well, how much gain does there have to be? How long does it have to last before people start saying, you know what, this might just be a new thing and we don't want to miss out. I want to become a millionaire, a billionaire. I want to double, triple my wealth instantly. So, and the thing is, at the end here, I'll end this piece here with Jim Cramer. At the end, he said, these meme stocks, it has to come to an end, but it's just getting started. Like, what is it?
Yeah.
What kind of information is that for me? Like, oh, so it'll end eventually. It's not even nowhere near ending right now. So, and I guess there is some truth behind that because I do think eventually this will end. But yes, bubbles end too. They pop and then everything crashes. Is that what we should be doing? And again, the Cramer and other people on CBC, other big channels, stock business people have been saying and changing their minds over the last couple months. At first, it was all lunacy. This is craziness. Don't go anywhere near this. And now it's starting to become more like this might be a new team. I think in the short term, but it's extremely risky. And in the long term, I don't think it will continue to exist. But we will have videos and stuff talking about this stuff more and more because that's why we're doing this to cover these
So
topics.
for the people who don't know what meme stocks are, can you just throw out a couple?
Oh, yeah. So you have GameStop, AMC, Wendy's, Clover Health, Clean Energy. I think BlackBerry was in there. Beyond Meat, I think, was in there too. There's a bunch of others. I mean, I'm sure you can look it up. You can find them on Reddit. I mean, this is the big phenomenon. Get a bunch of people together, put them on the same path, and they can throw their capital as if they were one giant entity.
And so now, from your perspective, right now we know, GameStop, AMC, Wendy's. Those are the three that you mainly have been mentioning. Are these ones, in your opinion, to invest in? And this is not financial advice, but this is from your perspective. Are these things that are catching your attention, not from, just the news aspect, but from, can I make money off of this?
So I'll start that off by saying never, ever, ever in your existence should anyone ever take one bit of information and use that as your thesis for anything. And you'll always do your due diligence, always do your homework, especially in investing. If you don't, you can't blame anyone but yourself if you lose. But no, for me personally, my risk tolerance is extremely low. That's very important as an investor. You have to know how much risk you're willing to take, what kind of ride you're willing to go on. And that's something that a lot of people, a lot of retail investors, they don't think about. They just think big gains, easy money, throw my money. If I know that the amount of risk here is insane. The amount of volatility in the stock is insane. The odds the price go to 350 to 360 back to 289, insane. So for me, that's too risky for me right off the bat. That's so much risk it doesn't make any sense. Second of all, I'm more of a value investor. I like to look at the value of something. And I like technicals as ways to get in and out and exit trades, and even some day trading, and even some pattern analysis, geometric pattern analysis. Those are all valid. But I really like to find things that have value, that have some productivity or something to kind of back up, justify why. Because I'm a logical person. I like to try to understand why something is the way it is. It has to really make sense, like the Warren Buffett kind of mentality. You buy companies for the people. You buy things you believe in. You don't just, if you don't understand it, don't invest in it. Which a lot of people do today with meme stocks and crypto. I don't know if they really understand what's happening, but they see the gains, they want them.
And in a future conversation, we're definitely going to bring on the other perspective of GME, the positive highlight, and that's going to be Jeremy. He's a strong advocate in it, and his point of view is definitely a unique one that I don't ever read in the news. So we'll come back to GME. That's a hot topic, and that's definitely going to be talked about for the next several months.